Hi, and welcome back to Market Conversations. Today is February 16th, and I just want to talk a little bit about CCIV and some option strategies that you guys can implement. But before I continue, I just want to let you know that I am not a financial advisor. This is just for entertainment purposes only. Also, I just created a Patreon page where like-minded people can talk about stocks, options, cryptocurrency, anything and everything in between. And if you guys are interested, I will post my link down below. It is only 33 cents per day. I just want to be able to help you grow as an investor and trader and grow as a community. So let's get started. Churchill Capital went up 31% today. And if we take a look at the 1 week chart, it's up 61%. 1 month, 186%. And let's just take a look at the volume. The volume is 96.88 million versus the average of 56.86. So the reason why it's going up is because they are nearing the merger with Lucid Motors. Let's take a look at this article that came out. In its title, Exclusive, Lucid Motors nears SPAC deal as Klein launches financing. Maker Lucid Motors is getting close to a deal to go public at a roughly $12 billion valuation after veteran dealmaker Michael Klein's blank check acquisition firm launching financing effort to back the transaction. The merger between Lucid and Klein's Churchill Capital would be the biggest in a string of deals by electric vehicle makers such as Nikola and Fisker that have gone public by combining with special purpose acquisition company. Churchill Capital has initiated talks with investors to raise more than $1 billion by selling shares in a private investment in public equity transaction for the deal with Lucid. The size of the pipe could reach $1.5 billion or more. The funds will be in addition to the $2 billion Churchill Capital raised an initial public offering in July. Lucid and Klein agreed on the key terms of the deal. If the pipe fundraising concludes successfully, a deal could be announced as early as this month. CCIV has gone up a lot since it was first rumored that it was going to merge with Lucid. If you are still planning to get into Churchill and you want to buy 100 shares of Churchill, you can consider selling a cash secure put, because with the cash secure puts, you can also collect a small premium which will reduce your cost basis. If you take a look at the options chain, I am using Robinhood right now. And let's just take a look at the February. So I have it on sell and put. So make sure it's on sell and it's on put. And let's say you want to buy 100 shares when it reaches $50. If we take a look, if you were to sell a cash secure put with a 50 strike price that expires this week, you can collect $425. And all you need to put up is the collateral. Well, you were going to buy it anyway at 100, so that's all you need is the collateral, which is $5,000. To calculate the collateral, you would multiply 100 by your strike price. So it's almost a 10% return in just a few days. So there's a few outcomes that can happen with selling a cash secure puts. You can be assigned, which will be in the money, or it'll be worthless and the collateral is released back to you. For it to be in the money, the stock price has to be at 50 or below. So when that happens, you would have to buy 100 shares at your strike price, which is $50. So let's say the stock price goes to 45 on February 19. Well, you still have to buy 100 shares at $50. So that is the risk that you're taking. But your break even is going to be at 45.75 instead of 50. And if it doesn't reach your stock price on Friday, you can sell another cash secure put for March. And for March 50 strike price, you can collect $1,285. And the reason why the premium is so high is because if we take a look at the implied volatility, it is at 296%. So let's say you don't want to buy shares at 50. You wanted to buy when it drops. Well, we can go to a lower strike price, but you won't be collecting a high premium. For this, you'll only be getting $40. And that's because there's only 3 days left of trading. But if you go to March with a 35 strike price, you can collect $465. And all you need is $3,500 in collateral. And that is more than a 10% profit in a month. You can always buy it back early. And when you buy it back early, you would have to pay the difference. And that's the strategy I like to use when the implied volatility is high. And that's all I have for you. Hopefully they do merge soon. Hopefully the deal goes through and Churchill will continue to go up. But just be careful. This can easily go down just as fast as it went up. Let me know what you think of Churchill Capital, and don't forget to like, subscribe if you enjoy this content, and do consider joining the Patreon page. Thanks so much.
Hi there. If you are interested in helping out the channel, you can sign up for Webull if you haven't already. They are currently offering 2 free stocks now. It used to be 4, so you don't want to wait until it gets to 1 free stock or no stocks at all. So you get 1 free stock when you open up a Webull account. And when you deposit $100 or more, you get 1 more free stock, which is valued between $8 and $1,600. And if you are transferring from another brokerage, they will reimburse you the fees up to $100. And you will also receive a complimentary 3-month subscription to Level 2 Events NASDAQ Total View from the day you sign up. So guys, what are you waiting for? 2 free stocks are waiting for you. Thanks again.
In Lucid Air, we have truly a technological tour de force. There's nothing even close to it.